Good morning everyone. Today, my group and I will be presenting our analysis of Leong Bank Berhad. Our presentation will cover an overview of the bank, its product and services, the impact of digitalization, and a financial performance analysis focusing on profitability, liquidity, asset quality, capital adequacy, and management soundness for the year 2023 and also 2024. Before we started, I would like to introduce our group member. First group member is Fadah Dawiyah. Secondly is Aina Shahira. Thirdly is Nur Humairah. Fourthly is Muhammad Haziq. And the last one is me, Razi bin Asri.
Leong Bank was founded in 1905 in Kuching, Sarawak. The bank originally operated as Kuang Li Mortgage and Remittance Company, serving the local community's financial needs. Throughout the 20th century, the bank expanded its services and geographic reach, adapting to the evolving banking landscape. In 1994, Leong Bank made a significant move by acquiring MUI Bank Berhad, which helped to broaden its customer base and product offerings. Today, Leong Bank is one of Malaysia's leading financial institutions, known for its innovative banking solutions, strong customer service, and robust financial stability. The bank's strategic focus includes digital transformation, expanding its service channels, and maintaining sustainable growth, positioning itself for continued success in the competitive banking industry. Last but not least, key financial indicators. Total asset amounted to 297.8 billion, while net profit after tax is 2.89 billion, return on asset is 1.27%, and capital adequacy ratio is 16.51%.
Next, overview of bank's product or service. So for personal financial service, PFS, HLB wallet and wallet types account line. First benefit is Pegadaian Insurance Deposit Malaysia PIDM protections. Money in HLBL wallet protected by PIDM up to 250,000 per depositor. Second, cashless. Convenience for simple QR payment and debit card use eliminate need for cash. Next for features. Visa debit card tap and go, where contactless payment with no interest fee, 8 ringgit annual fee from year 2 onward. Other than that, earn instant cashback up to 10 ringgit each month. Lastly, potential drawbacks. First, digital only nature, where no cash withdrawal features requires acceptance by machine for QR or card use. And last, annual fee that 8 ringgit applies from second year onward. So, for business and corporate banking BCB, HLB BizBuddy with mobile app for SME. For first benefits, it's easy to set up and management. Simple online registration, quick app downloads, and no terminal purchase required. Second, benefits. Operational insight. The dashboard and reports provide valuable data for business decisions and accounting. Next features. First, transaction management. View transaction history, issue refunds, and monitor sales performance via dashboard. Second, instant payment notifications, where real-time alerts when payments are received. Last, potential drawback. First, tax limits. Required machine to own a smartphone with Android 8.1 Plus or iOS 10 Plus and reliable internet. And lastly, same-day refunds limitations. Refunds must be issued on the same day.
This slide explains the impact of digitalization on Leong Bank's product and services, focusing on HLB Wallet, Wallet Plus, and HLB BizBuddy. In terms of customer behavior, HLB Wallet and Wallet Plus encourage higher digital payment usage through features like savings and gamifications. HLB BizBuddy support SMEs by enabling cashless transaction and faster financial decision. For bank's operation, HLB Wallet and Wallet Plus have lower costs through full digital onboarding and a secure user experience. Meanwhile, HLB BizBuddy allows scalable machine onboarding with minimal hardware that can improve operational efficiency. In the financial landscape, HLB Wallet promotes youth and also traveler inclusion and supports the shift to a cashless society. At the same time, HLB BizBuddy has SMEs formalized digitally and expand through cross-border machine accepted. In conclusion, digitalization enhances customer engagement, operational efficiency, and also financial inclusion at Leong Bank Berhad.
Now let's analyze Leong Bank's profitability ratios, which provide insight into its financial health and operational efficiency. The return on assets, or ROA, measures how effectively the bank is using its asset to generate profit. In 2023, the ROA was approximately 0.97%, and in 2024, it increased to 1.27%. And that makes it 0.3% differences between those 2 years. This improvement suggests that the bank has become more efficient at converting its asset into earnings, likely due to better asset management and cost controls. Similarly, the return on equity, or ROE, indicates the profitability for shareholders. It rose from 8.81% in 2023 to 11.34% in 2024 and makes it 2.43% increases from 2023 to 2024, reflecting enhanced shareholder value and effective profit generation relative to shareholders' equity. This upward trend in profitability ratios demonstrates Hong Leong Bank's successful strategies in increasing profitability while maintaining prudent risk management. Overall, these ratios highlight the bank's strong financial performance and its ability to generate sustainable profits for stakeholders.
So formula for split: interest rate on loan minus the interest rate on deposit, and formula for NIM, the net interest and earning asset times 100. So as you can see the values for year 2033 and year 2034. So for 2033, the interest rate on loan 5.65%, interest rate on deposit 3.895%, and net interest 3.547, 819, earning asset 196,173,051. So for the year 2034, interest rate on loan 5.20%, interest rate on deposit 3.40%, net interest 3685019, earning asset 209,228,890. So as you can see, the number 3 split. So at 2033, where we receive 1.80%, and same goes with 2034, 1.80%. So it's quantum split and indicate effectively interest rate risk management. So that's for net interest margin. So as you can see, at 2033 we earn 1.81%, and 2034 they earn 1.76%. So it decreased by 0.05%. So it indicate company earn slightly less interest income relative to its interest earning assets.
In this slide, I will explain the liquidity ratio of Hong Leong Bank for the year 2023 and 2024. Liquidity ratio measures the bank's ability to meet its short-term obligation using liquid assets. So there are two key ratios that are highlighted. So first, the loan to total asset ratio increased from 62.82% in 2023 to 63.63% in 2024. This shows that a larger portion of the bank asset was used for lending, which may improve profitability but also increases risk if not properly managed. Second, the liquid asset to total asset ratio declined from 2.96% in 2023 to 1.71% in 2024. This suggests a reduction in cash and short-term asset, possibly due to reallocation into higher-yielding investment that can result in tighter liquidity. In conclusion, Hong Leong Bank demonstrated stronger income-generating activities in 2024 with a trade-off of a lower liquidity.
As you can see, NPL of Hong Leong Bank in 2 years have decreased by 0.04%. The NPL ratio is also significantly lower than industry average by 1.5%, means that Hong Leong Bank has a better asset quality and effective credit risk management. For the LDR, it is increased from 83.78% to 87.58%, up by 3.8%, means that it is extended more loans relative to its customer deposits, implies better income generating capacity from its lending activities, but also a slightly lower of liquidity as a larger percentage of its deposit is tied up in loans. However, it is still within a reasonable range that the bank still has an adequate balance between profitability and liquidity. According to the above calculation, the deposit to shareholders fund ratio of Hong Leong Bank declined from 6.9 times to 6.51 times. This indicates that the bank had a higher growth rate of its shareholder equity than its customer deposits, which reflects a higher capital base and slightly lower financial leverage, which is better, although the bank is used its deposits slightly less aggressively in relation to its equity.
This slide presents Hong Leong Bank's capital adequacy, which reflects the bank's ability to absorb potential losses and protect the depositors. Capital adequacy is measured using capital ratios in relation to risk-weighted assets. Firstly, the capital to risk-weighted assets ratio, or also known as CRWA, incorporates both Tier 1 and also Tier 2 capital. In 2023, the CRWA stood at 16.01% and it increased to 16.51% in 2024. This upward trend indicates that the bank has strengthened its overall capital position relative to its risk exposure, thereby enhancing its capacity to manage financial risk effectively. Secondly, the core capital ratio, or CCR, focuses solely on Tier 1 capital, which represents the highest quality and the most stable form of the capital. The CCR increased from 14.03% in 2023 to 14.59% in 2024. This improvement demonstrates a stronger core capital base and indicates better compliance with regulatory requirements. In conclusion, The growth in both CRWA and CCR highlights Hong Leong Bank's improved capital, strength, and overall financial performance.
For admin expenses, increased from RM302 million to RM343 million, and the percentage increased by 13.58%. This faster growth mainly due to higher overheads, possibly due to staff costs, compliance, and digital investments. For the total expenditure, based on the bar chart above, the total expenditure of Hong Leong Bank increased from RM2233 million to RM2339 million, and the percentage is 4.75%. The slower rise shows overall costs were more controlled compared to admin expenses. For the admin expenses to total expenditure for 2023 is 13.52%, while 2024, 14.66%. The data demonstrates a 1.14% increase in admin expenses to total expenditure between these 2 years.
In conclusion, Hong Leong Bank demonstrated strong and consistent financial performance in 2024 despite operating in a challenging and uncertain market environment. The bank maintained steady profitability, sufficient capital adequacy, and healthy liquidity levels reflecting effective risk management practices and sound financial discipline. Furthermore, the continued expansion of digital banking services highlights that Hong Leong Bank's commitment to technological innovation and operational efficiency. These initiatives have strengthened asset quality and enhanced the bank's ability to adapt to the rapidly evolving financial landscape. As one of Malaysia's leading financial institutions with approximately RM297.8 billion in total assets, Hong Leong Bank plays a vital role in supporting individual, small and medium-sized enterprises and businesses through a wide range of comprehensive financial solutions. Overall, Hong Leong Bank's performance in 2024 demonstrates its financial resilience, strategic adaptability, and strong foundation for sustainable long-term growth.